Yesterday, I did a video on my interpretation of what commercial real estate is going to be, the next shoe that's going to drop. This is what Elon Musk even did a tweet on it, saying that commercial real estate is going to be the next problem that the banks face. So I did a exposure of what is the commercial real estate business all about in yesterday's video. What I wanted to do today was say, okay, it's not only going to be commercial real estate, it's going to be residential real estate. It's going to be student loans. It's going to be anything and everything where the consumer has to pay the bank for the bank to stay in business. So what I did was go into some detail. I expanded this chart that I showed you about a month ago to show what is the individual bank's exposure to loans. What percentage of their business comes from loans? And it's kind of eye-opening as to not all banks are equal. Let's get into it.
Best of Us Investors presents Kerry Griegmeyer.
My premise is if, in fact, we are going into a recession, if we're not already there, and the price of food is going to go up because Jay Powell is going to continue to raise interest rates, and we're going to have to make choices of what we pay and what we don't pay, and food and shelter is going to be those that we pay, and we'll probably stop paying our mortgage payment, our student loan payment, our credit card bills, anything that is optional, that I can get by, I can deal with the harassment. And so I am of the belief that the banks are going to receive the brunt of this. So then my logic was, okay, let me figure out which banks have the greatest exposure to this inability of the consumer to meet their obligations. And so I went to Seeking Alpha and I went through their financial statements on the banks that I'm tracking, and I looked at what was their total assets and then what was their gross loans. How much of their total assets was tied up in loan obligations, because I believe that if, in fact, we go into a recession, those loan obligations are going to become discretionary payments, and that is going to threaten the solvency of the banks. We know that people with money have pulled the money out and gone to treasuries. Now we're looking at what about the people who owe the banks money who stop paying. So again, I went to Seeking Alpha, and let me show you how I updated this chart, and let's see if you and I can pick who the next 4 banks are that are going to close their doors. Okay, here's my Seeking Alpha page. As you can see, they got a promotion on now where you can get their premium for $4.95 for the first 30 days and familiarize yourself with it. So what I did was go into Zion Bank, and then I'm going to come over here and I'm going to go to Financials, and it's going to take me to a page, and then I'm going to go to Balance Sheet, okay? And so on the balance sheet, then it's going to show me basically where their assets are. And what I want to look at is what is their gross loans. This is probably in millions, so that's 55 million. And then I want to go down here and see what are their total assets, and that's 89 million. So then I'm going to take that to my chart and find out what, and create a formula to find out what percent of their business is wrapped up and dependent on these gross loans being paid. So let me go over then to my Excel spreadsheet. Okay, here's the Excel spreadsheet that I did. And as you can see, let's go to Zion Bank. I have put them in here, and I've got their, this I did prior. I got their amount of assets, their assets to liabilities, which shows Zion Bank actually has more liabilities than they do assets. Their profit margins are 30%. Their unrealized gains are at 3.1 billion or million, and that has grown by 3% from prior year. So then I come over and I look at their net income, and again, make sure I'm lined up, that I'm on Zion, and their percent off their high is 59%, which is not the worst, but not real good. And then I come over here, and what I just did was what percent of their assets are represented in gross loans. And as you can see, it's 62%. I divided their gross loans by their assets, and their gross loans are 62%. Then what I did was rank them based on the highest to the lowest. And to get you an idea of what is normal, these are your bigger banks. This is J.P. Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, and Morgan Stanley. And you'll notice there's no number for Morgan Stanley and Goldman Sachs. They don't basically loan money. They're in the brokerage business and the investment business. But you can see of the bigger banks that loaning money represents anywhere from 27 to 32% of their business. What is this? This is Wells Fargo. It's 51. So it's a little bit out of line. So then what I did was say, okay, who's the highest? And that came out to be Truist, Truist Financial. That's pretty high. Then I looked in and said, okay, they're very dependent on the consumer making their payments. If we go into a recession and the consumer can't make their payments, they're in jeopardy. How do they rate in other avenues? The market hasn't punished them. They're only 43% off their high. If I come on then across here, their net income, they actually lost money this past year. If I come across here, their assets, unrealized losses is growing. They have a gross margin of 28%. I look at that and say, I need to put them in yellow. They are a bank that I would say, let me get that up there, is in jeopardy. They are one we need to be watching very carefully. Then you can see the other yellow banks that I have noted is First Republic, which I think if you watch any of the news, you understand they are in question. But they don't have First Republic, again, going across, they have about 78% of their business dependent on someone sending them a check on a monthly basis. So I think it's justified that they're in question. Then if we go to the others that are very heavily skewed towards monthly checks, that's Pacific West and Western Alliance Bank Corporation. They're at 70% and 77% respectively. Again, the one that really sticks out here is Truist Bank. I'm not really familiar with them, but what I'm trying to do is basically try to understand how these banks make their money and what their exposure is. You might have just noticed that the prices on the, or some of the numbers on the sheet changed. This is an Excel spreadsheet, and wherever I key it like this with this little building next to it, it's actually updating its price, today's price on about a 5-minute basis, which then changes other numbers such as the percentage of off the high, their PE ratios, a number of numbers. So I get a running count. This is something I'm going to put on our website once we get it built in the next, hopefully 30 to 60 days. So with this in mind, I see Pacific, Pac West is to be watched very carefully. Western Alliance, again, very dependent on the consumer. and you can see the First Republic. I think First Republic's days are numbered. I know Jim Cramer says he has a lot of friends that bank there, and they're just a very friendly bank. Yeah, Jim, that may be nice for you, but I think it's a stretch for other people. And as you can see, they're 92% off their high. They're probably going to be the next one that folds. So what do we do as investors to take advantage of this situation? How do we take this data and use it to our advantage? How do we take the hours Kerry spent figuring out all these numbers and updating them and saying, okay, I can make a good investment decision based on this? In full disclosure, I only own one of these banks, and that would be Bank of America. And I only own it basically because Warren Buffett owns it, and I believe it's his third highest exposure. And their business is only 34% of it is dependent on you or me or someone writing a monthly check to pay for a mortgage, a student loan, a car loan, a line of credit. So they're more in the financial business. Okay, let's see what conclusions we can draw from all this. My conclusions are pretty simple. More cash. I'm about 50% cash right now. I have a substantial holding in LNG, liquid natural gas, and I'm going to probably cut that in half once I get into a positive position. I'm about 2% down on it right now, but as soon as I get into a positive position, I will liquidate about half of it, and that'll probably bring me up to about 60% cash. I want to be there because I believe that there's going to be some tremendous buys that are going to be presented to me over the next 2 months, and those buys are going to be available as the banks crumble a little bit more. I think the banks just have gotten way out of whack as to what their position is in the economy. Then with the changes in the Federal Reserve's interest rates and their fight to control inflation, they're going to get hurt. And our banking system is going to have to be revised. And then we can move on with the disruption of technology and move further into artificial intelligence and how it's going to change the world, and machine learning, and how genome sequencing and genome editing is going to change the world. And I want to be in a position to buy the companies that are going to do that. And that's why I'm going to cash right now. I do see myself getting back into genome sequencing and genome editing, but it's right now on the back burner. We have to get through this banking situation. That's where the attention's going to be focused. That's where the market's going to move. And I don't want to be there to be hurt any further. So that's my take on it. I hope you find this beneficial. I want to create a place where that you can go and see that chart that I created on a daily basis. I'm going to do that through a website. And again, I'm meeting with people to try to get that done. It's not as easy to get good work done as you might think. My name's Kerry Grinkmeyer. I'm a retired financial advisor. I basically have a goal in life to help you make better investment decisions, to basically help you keep more of what you make. I just wrote my checks to the federal government for my taxes, owed a little bit more this year, and then to create family wealth. And I do that through a number of adventures that I pursue, stock market being one of them. I invest in rare whiskeys, and I am growing my wife's coin collection. So that's what my interests are. That's what I want to help you with. Let's keep talking. We'll talk again tomorrow.